Investor Jesse Stine was repeatedly knocked down by failed forays into the stock market early in his trading career. Frustrated, he stepped away, but the call of the market kept pulling him back. Each time he would fail, but he'd always learned something new. Then, in 2003, Stine's luck took a seismic turn. With $46,000 from a couple of previous small wins, he devised a breakthrough trading strategy, turning that modest sum into an astounding $6.8 million. A jaw-dropping 14,972% return, all within just 28 months, crushing the S&P 500's mere 25% gain. Stine's secret weapon? It's a carefully crafted formula that is detailed in his highly acclaimed book, Insider Buy, Superstocks, linked to below. Today, I want to highlight one critical element of his strategy, leveraging public insider trading data, especially the purchasing activity of C-level executives, as a powerful tool to inform his stock buying decisions. By uncovering this unique edge, the once struggling investor engineered one of the most remarkable comebacks in stock market history. When we think of insider trading, it's often the illegal kind, corporate insiders making stock moves based on confidential, non-public information. One infamous example, Martha Stewart's trade in Imclone Systems, where an insider tip about an FDA drug rejection led her to sell 4,000 shares of a biotech company and dodge a $46,000 loss. Since her trade used undisclosed information, it crossed into illegal territory, exactly the kind of unfair edge that SEC insider trading laws were created to prevent. But not all insider trading is shady. There are plenty of legitimate cases where executives buy stock in their own companies, aligning their interests with shareholders. Regulations allow this as long as trades are transparent, based on public information, and properly documented. Executives must file a Form 4 within 48 hours after buying or selling shares in their company, making insider activity open for investors to track. Similarly, the 1980s brought us the SEC's EDGAR system, which transformed transparency by making these filings accessible online. Now, individual investors like Jesse Stine can monitor these insider moves in real time, an edge he used to build his winning strategy. Today, sites like ours at Chaos Theory make it even easier. You can instantly browse up-to-date insider trading activity over on our site using comprehensive insider tracking tools. A link to the free insider tracking tool you see on the screen now can be found in the description below, or by going over to Chaos Theory and clicking on Tools in the top navigation bar. The public availability of insider trading data is significant for investors seeking an informational advantage. Academic research has consistently demonstrated that insider trades tend to outperform the broader market. There are many studies that examine the relationship between insider trades and stock price movements. I'll link to a few below. One study you can read over on the University of Chicago's law website entitled Hiding in Plain Sight, Can Disclosure Enhance Trade Returns? Analyzed insider trades using pre-scheduled 10b5-1 trading plans, which are a common way for executives to legally plan trades in advance. The study found that trades made under these plans still yielded abnormal results. Why do you think that is? Please feel free to share your answer with us in the comment section below. The best answers will win a free enrollment in our online no-code trading bot development course. Now, the exact numbers vary, but in many cases the performance improvement over the general market tends to range from 4% to 6%. Obviously a long way from Jesse Stine's 14,972% return, but we'll get to that in a moment. Let's first talk about insider buying versus selling. As a general rule of thumb, as an investor, you don't need to panic when you see insider selling. It's often not the red flag you might imagine. Company executives often receive stock as bonuses to align their interests with shareholders, a win-win for everyone. But when they sell, it rarely signals impending doom. Think about it, the VP, CEO, or CFO might simply be funding their kids' Harvard dreams, splurging on a well-deserved vacation, or it could just be smart tax planning. Maybe they're diversifying their portfolio, or simply need cash for a new house. Just like you and me, Insiders have bills to pay and life goals to fund. Here's the key insight. Most insider selling has nothing to do with their confidence in the company's future. While insider selling patterns can offer valuable clues to investors, they need to be interpreted through a different lens than insider buying. While insider selling can mean a dozen different things, insider buying sends one crystal clear signal: confidence in future growth. Think about it. Executives only invest their own money when they believe their company's stock is headed higher. Remember, the numbers we talked about earlier back this up. Academic research consistently shows insider trades beating the market by 4 to 6% annually. Not bad, right? But here's where it gets interesting. Jesse Stine's returns dwarf these already impressive figures. So, what's his secret? How did he transform standard insider buying signals into extraordinary gains? The answer lies in his unique approach to filtering insider activity, and that's exactly what we're about to explore. Many of the traditional academic studies I examined treated all insider trades as equals, a fundamental oversight that masks the real opportunity. When researchers lump together a desperate CEO's purchase in a failing retail chain with a confident executive's investment in a thriving biotech firm, they're missing some crucial nuances. Yes, these aggregate studies show that insider trades collectively beat the market, but that's like saying the average temperature in San Francisco is 65 degrees. It tells you something useful, but masks the vital details. This is where Jesse Stine's approach revolutionized insider trading analysis. While others were casting wide nets, Stine developed a precision-targeted strategy. He wasn't interested in the broad statistical average. He was hunting for specific, high-probability insider buying patterns that signaled extraordinary upside potential. Jesse Stine's genius wasn't just in tracking insider trades, it was in his masterful integration of multiple data streams. By combining insider trading patterns with technical and fundamental indicators, he created a powerful analytical framework that few had achieved before. At Chaos Theory, we've built upon this philosophy, developing sophisticated tools that layer traditionally separate data sources to uncover hidden market opportunities. Quick aside for our community, if you're intrigued by algorithmic trading but don't have a coding background, we've got you covered. We've developed a comprehensive online course teaching non-technical traders how to build powerful trading algorithms, including insider trading trackers, without writing a single line of code. Check the description below for a link and exclusive discount. Stine's philosophy is perhaps best captured in his own words. Out of the 15,000 stocks in the US and some 63,000 stocks worldwide, my sole purpose is to discover the 1 or 2 biggest future winners that have the ultimate risk-reward characteristics of undervaluation, rapid growth, solid technical base, inspiring theme, and it factor. All of them ideally supported by recent insider buying. While this video won't dive deep into Stine's complete methodology, his approach to leveraging insider buying data offers valuable insights for any serious investor. So let's skim the surface. Let's examine how he transformed raw insider trading data into actionable intelligence. Jesse Stine's methodology goes far beyond simple insider buying. Here's an overview of his framework for identifying tomorrow's breakthrough stocks. For the technical criteria, he was looking at the following: an extended consolidation period preceding a breakout. Think of it as a coiled spring. A focus on weekly/monthly charts. Explosive volume during a breakout, usually a 500% to 5,000% volume expansion, and an aggressive breakthrough above the 30-week moving average. As for the fundamental requirements, he sought the following: a share price sweet spot of under $15. An optimal range is between $4 to $10. Compelling value, specifically a PE ratio below 10 at entry. A tight float, 4 to 8 million shares, maximum 10 million. Sequential, sustainable revenue growth, which is his #1 priority. Expanding profit margins and operating leverage. Growing backlog of contracted business. The it factor, which is a compelling growth narrative, as well as a conservative, proven management team. The secret sauce? Well, Here's where insider buying comes in, but only after these other criteria align. Think of insider buying as the final confirmation, not the initial trigger. It's like the cherry on top of an already perfectly crafted sundae. So, while insider buying alone can offer market-beating returns, its true power emerges when integrated with technical, fundamental, and qualitative analysis. Stine's approach shows us that the magic isn't in any single metric. It's in the symphony of multiple factors coming together at the perfect moment. While Jesse Stine's approach has proven successful, it's just one piece of a much larger puzzle. The future of insider trading analysis is evolving rapidly, especially as we venture into the digital asset space. At Chaos Theory, we've developed sophisticated tools that slice insider trading data in multiple dimensions for traditional financial markets. For example, we've designed insider trading tools that help us explore industry and sector patterns, executive-level insights, such as CEO and CFO transactions, and micro-cap opportunities. The tool you see in front of you now is an internal tool built by us for our own trading needs. But here's where it gets really interesting. These concepts don't only apply to traditional financial markets, but also crypto markets. Monitoring insider crypto trades is a relatively new phenomenon, but it's ripe for exploration. The blockchain's transparent nature opens up unprecedented opportunities for tracking insider behavior in the crypto space. Here, for example, is a real-time bubble map of token distributions and wallet interactions. Again, I'll link to this tool below, but essentially what we can do here is identify and track project founders' wallets, monitor potential influencer wallet patterns before social media pumps, as well as analyze whale wallet behaviors with proven success records. This is digital forensics at its finest. We're even adapting tools traditionally used by law enforcement for trading purposes. For example, tools like Elliptic, CipherTrace, TRM, or BitQuery's CoinPath, as well as many others, are helping us gather the market intelligence we need to make smart buying decisions. These same blockchain analysis techniques that help police fight crime and banks or exchanges fight fraud can be repurposed to spot market-moving transactions before they hit mainstream radar. This is uncharted territory. While we're still exploring Form 4 filings, we're also exploring the blockchain's potential for next-generation insider tracking opportunities. It's about finding alpha in places others haven't thought to look. That's the Chaos Theory edge. This isn't just an evolution of insider trading analysis, it's a revolution in market intelligence. Intrigued by how modern technology is revolutionizing insider trading analysis? You're in good company. At Chaos Theory, we're not just following trends, we're anticipating them, building a community of forward-thinking traders who harness the power of automation to uncover hidden market opportunities. There are a couple of things you can do now if you want to take your trading game to the next level. First, you can subscribe to our free newsletter, the No Code Quant. Think of it as your insider's guide to the future of trading. Our newsletter subscribers get first access to our experimental strategies and cutting-edge insights, often months before these concepts hit the mainstream. We're constantly pushing boundaries, exploring new territories in algorithmic trading, and our subscribers benefit from this forward-thinking approach. Just go over to our website and click on Newsletter in the top navigation bar. Second, if you're ready to build your own trading bot, then consider enrolling in our comprehensive online no-code algorithmic trading bot course, where we'll teach you how to build sophisticated trading algorithms, including custom insider trading monitors, without writing a single line of code. Also, if you've made it this far, don't forget to hit that like button and subscribe. It takes a lot to put a video like this together, and it really helps the channel. Thanks for stopping by today.